Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, October 4th. It's 6:28 as I'm starting the video. And as always, please run your video player at 1.25x for maximum efficiency. Taking a look at futures, pretty much flat across the board. I do have nat gas up 4% and copper up 1%, but everything else is pretty much flat as a pancake. On the macro front, we've got vehicle sales this morning, factory orders, and kind of not on the radar screen. In the trading room, every couple of months, I'll put a one-liner in the group chat saying, "I wonder if China is buying all the soybeans and corn and wheat that they promised to buy in the Trump trade agreements that were signed a couple years ago, just generally assuming no one's watching and nobody's caring." Well, it turns out somebody was watching, and now the U.S.-China trade representative is set to publicly accuse China of not living up to the terms of the agreement. And that was kind of leaked out on Friday and over the weekend. And I guess that is set to happen at 4 o'clock this afternoon. Now, it turns out also that China markets are closed until October 7th, which I think is Thursday. So there might not be an immediate response out of China, but that's one sign that somebody's paying attention, and that those U.S.-China relations may be set to get a little bit more prickly in the weeks ahead. So we're going to have to watch that. Another thing we're going to have to watch is OPEC has a meeting tomorrow to discuss production quotas, etc. And everybody's wondering if they're gonna bump up production. But don't forget, last week China was out with an announcement of basically instructing all their utilities and big industries never to run out of energy. Doesn't matter what the price is. So if you had something and you knew there was a big purchaser out there willing to pay any price, within reason, would you be inclined to increase production? I don't know about that. We'll have to wait and see. But that'll be pretty interesting. Also, it was revealed late Friday that Vice Chair, FOMC Vice Chair Clarita was part of the let's front run the Fed announcements by trading ES. And it was published over the weekend that he was trading the day before Fed announcements. So I kind of expect his resignation today. We'll have to wait and see. But pretty pathetic revelations coming out of the Fed. So we'll have to see what happens there. And I'm sure you've been following along. There's been a Facebook whistleblower sending out information over the last 3 weeks. Well, this person was on 60 Minutes last night with a pretty scathing review about Facebook, basically making concrete what most people already knew, that these social media sites like Facebook, like Twitter, they are most interested in engagement, keeping you on the platform as long as possible so you see as many ads as possible, so you make as many purchases as possible, which makes them more money. But it turns out, as we all know, that the dark side of humanity is much more interesting and engaging than happy talk. So what these platforms do in your news feeds and in the things that you see, it amplifies anger, it amplifies hate, it amplifies controversy, and in an attempt to get you to stay on longer, to reply to that tweet, to, whatever you do on Facebook, to, counter what you see. So all the time it's stirring the pot, it's keeping things going that would normally in everyday life simply die on the vine. Racial conflicts and all this stuff we've been talking about. And it also puts a fine point on the fact that Facebook has known this all along. It's their own research being used against them. The whistleblower takes 10,000 pages of their internal documents, etc., and shows that even though they knew their platform was having this effect, that they did it anyway for the money. So we'll see how that pans out. Okay, now on to the markets. U.S. dollar wrecking ball breakout. We're up in a new channel that I drew. So you can fixate on this line here, 93.50 on the U.S. dollar chart. That would be holding the breakout. And then, as it goes higher, it's going to start digging in to places like EEM. Why? Because a lot of these emerging market countries have dollar denominated debt. And then when, of course, the value of the dollar is going up, then it takes more of their local currency to buy the dollars to repay the loans. So that's part of the reason why they call it a dollar wrecking ball. If the dollar starts taking off quickly, then it can put a lot of these emerging market economies in a bind. So we've got a level here at 50. I think below 50, it's a short. We're moving into a void here. And as I noted last week, starting to see more activity in the option chain on the put side on EEM, kind of front running what they think might be happening with the dollar. Of course, we're also all bond traders now. Why? Because the interest rates have so much to do with what asset classes are going to be working in the market. So we've gone from a zone between 1.3 and 1.4%, where kind of everything can work, both tech and cyclicals, etc. And we've blasted through this next trading level up above 1.5%, where the rising rate environment is going to be a big headwind for tech and bubble stocks that thrive on a falling rate environment. So we need to watch this and kind of key off of this 1.5%. As long as it holds that or goes higher, the rising rate environment type cyclical rotation will be in play. And here it is on the TLT chart. We had talked about possibly, if you're interested, taking a short on TLT on a break of 147 and the 200 here. We've taken a leg down. Now it's kind of stabilizing here. And I think anything below the 200 I think is a decent short. I do think rates rise in Q4 and in the next year, but price talks. You can't. That's nothing to trade on. But technically speaking, as long as it's under the 200, the trend is going to be lower. Now, if it recaptures and comes back into this range, then you simply got to take off the trade. And I saw this online that I thought was interesting. It's an ETF, EQRR, and it is an ETF for a rising rate environment. And you can see, if you remember, back in November was the low in rates, and then we had that real fast run up. And since then, we've been in a decline, but now we've just recently broken out. And the reason I point this out is because I wanted to show you the weighting that this ETF has for, a rising rate environment. 31% is financials, 23% is energy, 20% is materials, 16% is industrials, and about 9% communications. So, and this is the thing, these are the things that we've been talking about over the last week or two, where if rates are rising, we want to be hunting for longs in the sectors that are most sensitive to it. And if this equal weight ETF, not equal weight, rising rate environment, equity rising rate environment ETF is going up, these are the sectors that are going to most benefit from that. So these are the areas where we want to be hunting for longs. Now, does that mean we can't pick off certain sectors elsewhere? Sure we can. Perfect example of that is hotels and travel. Look at cruise lines. Look at hotels. Look at restaurants to a certain degree. What were some other ones? Travel related. Airlines, those are in industrials, would be an example of that. So where you want to steer clear of is bubble country, right? The real high valuation names, or the names that are losing money, I think those are going to have real trouble. And there may even be a setup where you could be short bubble names and long financials, energy and materials, etc. So kind of to get them coming and going, if you will. So put EQRR on your radar, and let's watch that in the weeks ahead. And if we see it roll over, then we'll know it's not working. All right, VIX. On Friday, we went from the top of the range to the bottom of the range. And so we're still looking for either a trend lower or a trend higher. And, we saw a little bit of both on Friday. It was kind of a wild day. Nothing happened on the oscillators, so I'm going to skip that. Moving on to our equal weight SPY. You can see here we put in, it wasn't really a double bottom. We had a low here. But then on Thursday, we had an equal low here. And then Friday, we had a bounce. I would be keying off of 151.50 and then looking for a break above 153, which would recapture all the moving averages and break above resistance. Moving on to SPY. What I did here, because I wanted to kind of give you a flavor for how to kind of figure out if a bounce is going to be a low. Have we put in a durable low, or have we just had a relief bounce after a bunch of selling? So breaking this chart down, what do we see? Price is below the 8 and 20 day, right? So as soon as you hear that, means defensive. Price below the 50. You can see we're below here. Even more defensiveness. And as these fast moving averages, the 8 and 20, go below the 50, that turns the chart even more bearish, right? Because remember back here where we said all the moving averages were bullishly stacked. We got the 8 above the 50. We got the 20 above the 50. We got the 8 above the 20. So everything is stacked up bullishly. Here, it's rolled over. So now the 8 is below the 20 and the 50. And in another day or so, the 20 will be below the 50. So that's this setup in reverse. You've got the EMAs bearishly stacked. So we've got to have a lot of caution here. Price is below downtrend resistance. We see that there. On the bullish side, we held the prior low, right? So that's good. We're still above the 200. That's good. But we do have RSI and PPO in their bearish regimes. So, putting all that together, Friday we had a welcome bounce after a bunch of selling, but now it's all about follow through. Can price move up, take out downtrend resistance, take out the 50, fill this gap, and get back above all the moving averages? And here we see it on the SPY 2-hour. I think today, if you're actively trading, I think you can be long above 434. But I think the real kind of moment of truth will be at 436, because you see all the rejections here at 436. It's been a real problem. So if price opens higher this morning and then pulls in to fill that little open gap, you can buy long against 434. And if you miss it or want to add to your position, you can do so on a recapture of 436 and then look for a move to 438, then a move to this moving average at 439, which is the 50, and then we've got the open gap. Moving on to the Qs, very much the same type of analysis. We've got the RSI and PPO below their midpoints, so those are in their bearish regime. We've got the 8 below the 50, and you can see that in the navy blue, the 20 EMA is diving quickly. So I would expect, that to drop down below the 50 in the next day or so. And on Friday, we had this big reach down, almost got to our level here at 352.50, and then they bought it up, but you can see they did not take out 360. And we can see that in the 2 prior days, Thursday and Wednesday, that price tried to get above 360 and failed both times. So this morning, if you see price break above 360, I think you can buy that and be long for active trading. You'll see it right here. And then look for a move to 364. But bigger picture, jumping back to the daily chart, we've got to come up here and take out this downtrend resistance and 50 EMA here to kind of get more secure in saying, you know, this hammer candle was the low. So what I'd like to see today is simply any kind of a green candle would be productive. The bigger the better, of course, and that would look like a reversal would be in place, but we're nowhere near out of the woods yet as far as that goes. And remember, and we can see it in the charts already, that NASDAQ is underperforming, right? It has fallen farther and recovered slower than SPY and IWM. So let's move on to IWM. Here's the 2-hour chart. Big advance, sizable pullback. We filled a gap in here that I've removed. On Friday, we took a reach down to this gap, got a good bounce, and got great follow through, breaking above this 222 level where the 50 EMA comes in on the daily. So that's looking real good. What I want to see today is a move above 223.50 and then a move above 224. Remember, this is we're in a big trading range, and we've got a midpoint band between 222 and 224 right in here that has been support and resistance going way back in the chart. So keep an eye on IWM, and if things play out in that rising rate environment that we've been talking about, you should see IWM outperform the NASDAQ if that rising rate scenario plays out. So if you're a guy that's actively trading, or even if you're a swing trader, I go back to the thing that I said before back in here, where if price breaks above 224, that's more or less my go, no-go line on IWM. I think above 224, you want to be long. You can, buy some duration with that and look out a month, 6 weeks, and then look for a push up towards 230 and at 234 at the top of the box on that move. And here's the 30-minute chart just zoomed in. You can see we pulled back a little into the close on Friday. I think if you break above 223.50, I think you buy it there and look for 225 and then a move back up towards the this prior high up towards 228. So I'm still really constructive on IWM, mostly because I think that rotation into financials, energy, industrials are gonna pick up in Q4. Facebook. We're gonna have to see today whether that 60 minutes and all that stuff results in anything material. You can see that price has really consolidated a lot down here at 339. We got a little breakout on Friday, but all things considered, not really very strong. I think today, if it holds 342, you can be long, and then you got resistance up here at 346, and then at 350, where you've got the downtrend line and the gap both coming into play. So I'd be a little cautious on Facebook, unless you're just a real active trader kind of thing. Let's just see how this opens. I didn't look at it pre-market. Maybe all that stuff is already baked in the cake, and nothing happens today. I have no idea. Apple undercut the prior low, got a nice reversal on Friday, and now we're up back towards this 143. I think what you want to see here, if you're a bull, is a breakout above 143 to take out this downtrend resistance, and then you've got basically $1 increments all the way up that have served as resistance points in the past. Tesla remains really strong, nice up channel. I think this one is pretty simple. Stay long against 770 and be concerned if you lose like 760. I think that is going to be a point on the chart where you need to pay attention. Here's that consolidation box we were talking about, with 770 being the bottom. If you drop out of that, you're going to go to 760. And if you drop below 760, you're going to fall back into this prior trading range and probably come down rather quickly. So I think 760 is really the most important line. But while in this flag, I think you can be long against 770 and look for a flag or a move back to the top of the flag at 790. And then, of course, above that, you've got a breakout. Microsoft. Fast move down. Consolidation. Breakdown on Friday. Came into this support level at 282 and then got a really nice bounce the rest of the day back up to 289. So I think that's your pivot. And keep in mind, you've got a sizable, a little over $3, like $3.50 gap between 291 and 294.50. Even if you're not interested, in some, big position in Microsoft, I think you should alarm 291 and then trade that on a short-term basis. Just, you can get some calls for the end of the week and try and get that $3 gap fill. And then that'll be the bigger moment of truth at 294, because that was the level where all this trading took place. And we'll be at the top of the downtrend channel, the way I've got it. And you can see we've got some moving averages that are going to be resistance there as well. So I think, 294.50 is going to be a little bit harder nut to crack than, say 291. Top of the channel, bottom of the channel, bottom of the channel, top of the channel, then that's the real moment of truth back up here. But, you can capture, $5 from here, or $3.50 from the gap entry. And so I think that would be, I hate to say, an easy trade, but I think if you got a move into this gap, you would get a fill up to like 294.5. Amazon still kind of looks like it's stuck in the weeds. You've got the 200 EMA at 32.90. It broke below on Friday. Did not really participate in the bounce that we saw in a lot of names and in the market in general. So still relatively weak. But if you got a reclaim of 32.90, a reclaim above the 200, then that would be a good place to try a long because, well, one, you're recapturing a level, and two, you're recapturing the 200, which makes it even more important. So I think 32.90 is quite an important place on the Amazon chart. Google got the look below on Friday into this $50 gap. Then they reversed it and bought it up, back up to resistance here at 27.35. You can see that was a problem last week, right back in here. I think if you break above that and then break above 27.50 at the 50 EMA, that would be either of these two spots, whatever you can get or whatever you're comfortable with. Getting long there, I think, would result in a nice trade. Why? Because I think you would get a boost after you recapture the 50 EMA. I see a quick run up to 27.80 at the bottom of the gap, and then with any luck, you would get a gap entry and get you up to 28.20 right here. And so if you were just to, let's just say you gave up this, the space from right here, 27.35 to 27.50, that's $15. Let's say you just say, you know what? I'll buy a reclaim of the 50 EMA. So you go from 27.50 to 28.20. That's $70. I think that would be a nice trade. And then once you reclaim the 50, then that's a beautiful line to shoot against on the long side. Netflix. Notice the chart looks totally different than the other tech charts, aside from Tesla. Tesla's in a nice uptrend. And so now Netflix is also showing relative strength because the selling has been negated. Was at a high over here. We saw some selling, and now we're back at the highs. What you want to see now is a breakout above 613 and move it into blue sky country. I think if you take out these highs, whether you say 613 or 615, I don't think $2 is going to make a difference on a $600 stock. Take it long when you feel like, it's secure. Like I said, 613, 615, I don't think it makes a difference. And remember, we are coming out of a, let me show it to you. We're coming out of a $90 trading range down here. So 90 on to 560 gives us 650. So that would be our measured move target up to 550, or 650 or 660. So, at all-time highs, you got to buy. I mean, that's the point. And after this thing has consolidated for over a year, I think that would be just the beginning, honestly. Because if this breaks out and runs to 660, I don't think it's going to do that unilaterally. With tech in the weeds, it can outperform, but I don't think it's going to run away if if tech in general has headwinds. So I think that would bode well as a new leadership stock within tech, mega cap tech. So I think this is going to be a good one to at least watch. And I wouldn't hesitate to take a long if it can break out to new highs. SMH Daily, rug pull. Look at this hammer candle on Friday where it reached all the way down to the prior low right here at 251. What was it exactly? 252.35 is what it says. Didn't quite make the prior low. But the point is, put in this big hammer. Now, what you want to see today that would give you a lot of confidence that this was the low would be a nice green candle today above 258. Remember, that was our breakout line. So I would be a buyer on a move back above 258, and then you can shoot against that breakout level going forward. And then that, I think, would bode really well for semiconductors. So let's wrap it up there. If you're new to the channel, hope you see some benefit in having these levels laid out for you. If that's the case, please hit the subscribe button and the alarm bell. That way you'll be notified of all my content. Please leave me a question or comment in the comment section. I'll do my best to not only answer them, but to cover whatever topics that interest you in subsequent videos. If you jump over in the show notes, there's a place to register for all my content. You'll find a link there that'll take you to the website, and you can drop in your email, and then you'll get everything I publish sent to your email, which makes it really convenient. And you'll get a invite to our trading room. It would be great to have you there as well. And of course, longtime listeners, I really appreciate you sticking with me, and I hope your trading is going well. Let's have a good fourth quarter. This has been Chris Buss with Traders Profit Compass. Talk to you next time.